All right, it's after 4 o'clock. That means another market day is in the book. And I'll tell you what, the technicals are just, man, they just keep on playing out. I told you exactly what to watch for this morning. And now we get to look and see how things shaped up throughout the day today and where that leaves us going forward from here. And I have a few other insights that I want to share with you in this video. Another 20% profit locked in today on an intraday trade, pretty much right darn near towards the open there in that first half hour of trading, which has the volatility where the options tend to play out pretty nicely. We'll talk more about that, where you can see it with the Discord, with me and the other panel experts, links in the description. We'll talk more about that later. In the meantime, I do want to get right into the charts. We're going to talk about QQQ, SPY, IWM. I'm also going to talk about how Rigetti and Big Bear AI, so BBAI and RGTI, how they're shaping up as well, because they could definitely be those next big plays, especially if we keep on moving up in the markets, that we could see that secondary whip effect from the indices and the major plays, that broadening effect go out and hit up those little smaller companies as well. So let's pop this up here for you. We're going to kick things off with a QQQ tracking the NASDAQ 100. So y'all, check this out. I talked about these two trend lines that we had. I said we need to open up above these. So far we did. I said this 20-day coming down, and check down the technicals for just a moment here. This blue 20-day moving average, I said it's critical that we get up above that. We got up above that. We had a nice green day today on that one, closing up almost 3% again. Let me pop these back up here for you for just a moment. The RSI, by the way, let me move that up here so we can see a little bit more pronounced. Up above 50, which means we crossed into bullish territory as well. And you can see if we look left that we're hitting that chop zone with this previous low that we have down here. And that also tends to be about even with what we saw on April the 9th when Trump suspended some of the tariffs for that 90-day pause, if you will. So what do we have looking for from here? From a moving average standpoint, we have the 50-period SMA. So the simple moving average, last 50 closes, divide by 50, that comes at 481.25. That is one of those spots that we could look for where that top could come in. Another thing that we can do, if you pardon my technicals for a moment here, is that we can draw a Fibonacci extension from the most recent low to the peak that followed, well, I should say 2 lows ago, and then to the peak that followed that, and then to the most recent low. So based on that extension, we just hit the 618 level today at the 0.786 level. That's 479 that we could move up to, which does take us into this area of chop. So it could happen. It could happen tomorrow. We'll see how things set up. I also do want to add some commentary on the catalyst that we have coming up next week, because next week is no small week. As a matter of fact, it could even affect how we close on Friday. I'll talk about that in a little bit. In the meantime, up above that, the one full movement from this bottom to that top is the same movement that we have here. That puts us up near the 200-day, which happens to be around 491.60. So are we going to be able to get up there? I'll tell you what, we got our work cut out for us in order to get up there. We got to see if we have that momentum going. This was not a huge volume push kind of day. The volume was half decent. It was okay, but it definitely wasn't anything astronomical. As a matter of fact, it was below average. That's this 20-period moving average on volume that we have. You can see nothing like we had back on April the 7th or April the 9th. Just kind of a regular day. So then not a strong volume move. That doesn't necessarily spell anything too positive for us in terms of making it up to the 1. So I think that we will retest the 50 SMA and probably sell back down a little bit. There are some EMA values too, the exponential moving averages. So just to cover real quick what I talked about in this morning's video with those EMAs, I said watch for the cross of the 5 and the 13. That's the yellow and the green that are about the middle of your screen here. My apologies, put it back up there for you. There you go. There you can see that cross. That was today. That's that bullish signal that we're looking for in the near term, even though on a longer term basis, we're still down below the 200-day. We're still down in bearish territory. And where did we actually break this peak? 467.83, and today's peak came out to be 467.66. So pretty much even, but not quite over what we had before. The post market's just, man, it's battling with that out there. Google earnings hopefully helping that out a little bit. They're up in the pre-market. We got to watch these moving averages. This one's at about 474 for this 50 period. We can find a little bit of resistance there, a little bit of rejection. And like I said, here's the simple moving average that you see here. That's up above it at 481. So it doesn't react as much as we do for the exponential ones. So there it gives that small range that you have. But I really think paying attention to this Fibonacci extension and that number coming in at about 479 should be about what we look for. And notice it happens to be between the two moving averages as well, the 50 exponential and simple moving averages. So we could still move further up from here. We got the momentum to do it. We got the price action to do it. The moving averages are saying so. The one thing that we're missing, one of the ingredients itself, is volume. Tomorrow shouldn't be a huge catalyst kind of day for us. We got to watch and see what exactly shapes up, what comes our way. We definitely want to pay attention to what happens tomorrow in the market and how that sets us up. Now, those catalysts that we have, I said I'd talk about them and then I'll get back into the charts. We do have PCE, personal income and outlays, along with GDP, Q1 GDP, the advanced estimate coming out for us on April the 30th. We got to pay attention to that as a potential catalyst. Tuesday, I believe we have JOLTS, Tuesday of next week, and then we also have non-farm payrolls and unemployment rate. So we have a lot of things that could still really rattle the markets if they point towards the wheels coming off anyway, despite the good tariff news. That could be something that pushes us back down or takes more of that downward pressure off the market. It really depends. Are we seeing labor market strength? If we see signs of labor market strength or no signs of further weakening, either way, that's still pressure off the market for our downward pressure off the market for right now. We could see some levity. If we get some bad news kind of numbers, that JOLTS ends up being way off for us, it comes in a lot lower than expected. Or if we take a look at GDP, it's strongly negative in the advanced estimate from Atlanta Fed GDP Now, I should say, for Q2. Well, how's that shaping up? If they go negative, that's more downward pressure on the markets. Be ready for it. If it's positive, not necessarily great for us, because if it's positive, it's probably going to be a low positive. If it's positive though, positive Q1, positive Q2, more downward pressure comes off the market, at least in my opinion. I think that's the way it's going to go, because instead of being recessionary, it could be more a period of lower growth, which still not great, but much better than recession. So with that said, that's next week. We want to watch for those Tuesday, Wednesday, Friday, Thursday. We also have initial jobless claims. I'd have to look at the calendar to see if there's more stuff that's out there, but be wary of next week. Watch how we close this week. If we close on a high note this week, then Monday could be that day where we start to see that wild volatility coming back our way, setting us up for the slew of catalysts that come up next week. So let's get over into the SPY. And I'm going to show you a lot of the same stuff that we saw for the Qs. We're above the 20-day. I said that was the first thing that needed to happen. The RSI above 50, that was the second thing I said needed to happen. Very much in bullish territory. Once again, we can sort of have subdued volumes. Volume's not coming in the way that we want it to have that strong move up above the 20. But we'll take what we can get for right now. That's enough that we could still see that levity come to the markets. We could see it still rise from here. Once again, the 786 happens to be at about 561, which coincides with this 50-period simple moving average that's coming down. The one full movement, this same movement that we had here, translated over here, 575.28, which coincides pretty much with the 200-day, which, man, that's going to be a battle. I'm telling you what, there's going to be a war fought by the price action with those moving averages if we make it up that high. And I think because most people have a bullish bias, including me, I think that's something that we all want to see happen. I know my long-term portfolio, my main portfolio, is the thing that really benefits on those days. And as far as trading goes, I trade up or down. It depends on whatever the charts tell me. Either way, adding alpha to my portfolio, allowing me to build my cash position and do more investing. So let's go over to IWM. If we give it the same treatment that we saw with, there we go, and down to there. So giving this the same treatment that we saw with the SPY and the Qs, we're up above the 20-day and putting the retracement on here. This white line that we have coming across here is part of a bull channel, and that coincides with the 786, even though it's down below the 50. So we could still be seeing some subdued price action compared to what we would have for SPY or the Qs, but it's also going to be more sensitive, being that tracks the small caps. Once again, this is IWM. That number comes in around 197. One full movement up above that is about 201, which would coincide about with the 50-day that we have on here. In terms of the EMAs, I'll take the technicals down and put these moving average indicators up here instead. So we have the 513 cross. That's a bullish thing. The 50 is that thing to contend with. That happens to be at about 200, 199.88. The SPY, we could do the same thing. We could take down those technicals and we could put up the exponential moving averages, take down the simple ones. Once again, we have that 513 cross, early bullish signs for us. We want to keep paying attention. Big Bear, AI. 513 cross, man, we almost got it. Need the volume support in there. We're at 46.92 on the RSI. Keep watching this penny stock. This could really outperform for us. I think tomorrow, if we get that cross tomorrow, if we get a strong market day tomorrow, maybe I'll make either an intraday trade, or maybe because the weekend's coming, I don't want to sweat the weekend risk on those options. Maybe on Monday would be that day. Next week's kind of a choppy week, though. I talked about that, but still, this is one that I'm absolutely watching for. The descending wedge, the fact that we broke up above it with the bullish thing. We're getting that 513 cross potentially, but down here it does say that we need to cross above the 50 for the RSI to see that bullish momentum come back to it. It has been rising for a while, and the prices have been coming down. That's bullish divergence that we're seeing right now, but we still need that cross to make it happen. We could see that outperformance coming sometime in the near future for a big bear, and that's why I'm tracking it. And being a penny stock man, I'm telling you, 30 to 40% upside. And if you stack options on top of that, penny stock's highly risky. I'm never going to tell you what to buy or sell, but I'm telling you, I'm watching this one. Rigetti, when we move over to quantum stocks, I told you I was nervous in my morning video about crossing over the 50-period exponential moving average. Well, just today, that red line is that 50-period exponential moving average. We actually closed above it, but you can see these high wicks. This one's kind of indecisive, narrow body, long wicks, top and bottom. Today up above, but you'll still see that we have that selling pressure, the same selling pressure that we saw over here, which tells me that getting up above 973, 975 is going to be pretty important to us and seeing further upside take place. In terms of volume, not a bad 2 volume day, if you will, still down below average, not igniting like we saw on April the 9th. But we could still be shaping up to something. We have a 513 EMA cross over the last 2 days. RSI up over 50. We could see that moment coming for quantum, especially look at this bottom that we have in here. And I'll tell you what, this is one that could absolutely skyrocket. And one of the reasons why I remain very, very much bullish and very much interested on this one, and one that I might actually make the options play on. And I wanted to share with you guys, just like I've shared it over at the Discord. And if you guys want to see my technicals, my buys and sells, other analyses that I put out there, such as I did with the market this morning before the market started, I said, hey, today is likely going to be a good day. Here's the evidence why. Listed it all out in my expert channel. You can also check out the other expert channels that are over there as well. We have a joint Discord together. Sign up a little over $1 a day for the earner tier, gets you access to all the expert panelists. There's an Ask the Expert channel in there as well. Absolutely worth checking out. We also have the Bread Bot, which can tell you when those major moves are coming for stocks and cryptos, bond market stuff, you name it. And then there's also AI tools that are over there, advanced charting tools as well, and a community of thousands of members over there, all working towards financial freedom. And it's the best community that I've ever been a part of, all striving to add that alpha, to add that financial freedom. And it's just a great place to be overall. And we are there to support you. So come on over and join us. I'm telling you, the opportunities are seemingly endless. I'll tell you more about some coursework, how you guys can learn it yourself later in the video. So popping back over here, Rigetti, keep on watching this one. Maybe, just maybe, check this out. If we do the same thing that we did to SPY and we did to QQQ, we did IWM, one full movement puts us up to about 1069, almost coinciding with this 1091 that we have here for this 0.5 for the Fibonacci retracement that we have up here. So we could be hitting that mid to high 10s if we get that full movement, potentially even more if we have a positive catalyst come along for the quantum computing space. So let me wrap things up here with Dollar Tree. I said this morning in the video for Dollar Tree, I said, hey, we got the pop. I do still think that we're going to fill the gap up to 94. I wanted to see it cool off a little bit today. It did cool off down to near 80. I kind of want to see it just a little bit cooler than we have right now. Just bring it back just a little bit, although that was a decent spot. You can see it retrace back up over $81 per share. I still think that we have some outperformance coming for Dollar Tree, and I think that this is still a play that benefits on both sides. If things go recessionary, I think Dollar Tree actually stands to benefit. We have a potential golden cross coming. Check it out. We got the 20 over the 50. We have the 20 crossing up towards the 200, the 50 crossing up towards the 200, and that's why I said that there's a potential golden cross coming. We got that question mark's out there. Is it going to happen? That's the big one. You can see we had some pretty exciting volumes most recently, really starting to bring energy back into the stock. And I do think that we could, after a big old beat down on Dollar Tree, I think we could start to see some of that recovery come in that makes it back to a 3-digit stock over time. So it's one that I'm definitely watching. I think it's going to benefit on both sides, whether we have economic strength or weakness. I think either way, Dollar Tree can happen to be at the center of it. So just one of those plays I thought that I would share with you. Guys, if you want to learn technical analysis yourself, learn how to trade using the bread recipe, learn about how to trade using options, there's coursework in the description through Stockmo Academy. Helps support my channel and also helps you support yourself in that journey for alpha, financial freedom, whatever it is that you're after for your portfolio. There's something there for you. Use code word doctor when you sign up for those courses. It's going to save you a ton of cash. And if you bundle those two courses together, it saves you even more. Let me know what you think of these stocks, this analysis. Whatever you want, just say hello down in the comments. I'd absolutely love to hear from you. Subscribe to see more of my content as it comes out. And otherwise, I'll see you over at the Discord. Make sure you use that earner tier. Links in the description. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.